Hey everyone, thank you so much for being here. Before we kick off this week's episode, just a quick ask. Please don't forget to like, subscribe, hit the notification bell to make sure that you never miss an episode, never miss out on any of the strategies and tactics that we're sharing to help you continue charting your own path to freedom. And if you'd like to go deeper with any of this, we've launched a free Facebook group, which you can join at pathtofreedom.com/group. And we've linked that in the show notes to make it easy for you to find. All right. Thank you again for being here. Let's drop in to the episode. Hey, what's up, everyone? And welcome back to the Path to Freedom podcast. Today, I'm joined by Nolan Bradbury, and Nolan is the founder of Bradfield Accounting and Advisory. I've been looking forward to having Nolan on. We had a chance to meet and connect a few weeks ago, and excited for what he's going to be able to share with the audience today. So with that, Nolan, thank you for being here.
Thank you for having me, Wes. Excited to talk some more about this stuff.
Yeah, for sure. And let's kind of get out in front of this, right? Because before anyone, exits out of this podcast because they heard the word accounting, like real quick, why is this so important for any business owner or even an aspiring business owner? Maybe they're not in business for themselves yet, but that's the goal they're working towards. Like you and I talked about the fact that like most business owners hate accounting. They understand it's important in their business. But it's not just like, this thing that you visit once or twice a year in order to file your taxes. It should be much more strategic in how you're looking at your accounting, how you're working with, your accounting firm or your CPA. It can actually help business owners drive significantly more profits to their bottom line.
Yeah, absolutely. I think maybe to frame this up to start with, I think it's sometimes important to think about, we have our physical health, right? We go to the doctor, we take care of ourselves, we work out, maybe we weigh ourselves occasionally to make sure we're kind of doing what we need to do. We watch our calories, but we don't apply the same sort of approach when it comes to our financial health. And to your point, a lot of that is because I think we tend to set it and forget it. It isn't something that's always in our face, or perhaps there's an avoidance issue with it, right? Sort of as you alluded to, which is, I feel maybe intimidated by this. Maybe I have had a bad experience with someone, either a CPA or a bookkeeper in the past. It kind of left a bad taste in my mouth. I don't really want to revisit that. Any of those things can lead to sort of an avoidance with that thing. But as you pointed out, the problem with that is just like with our physical health, if we avoid what we need to do there, we're going to end up out of shape. Same thing happens on the financial side. We're going to end up less profitable than we need to be. We're going to be out of touch possibly with what our customers are needing or what the market is driving at, all of which ultimately lead to less than ideal decision making. And so oftentimes what we see with businesses is that as they start out, a lot of what they do is based upon intuition. You get into business, you think you have an understanding of sort of who your client is. You probably do. But as you scale and get bigger, you become more out of touch with what each client wants because you have more clients, right? And there's more variability in that. And so there's a point that you reach, and we'll talk more about this, I think, down the road, specifically about how this works. But it's a point where you reach where the intuition sort of driven decision making, it will start to fail you. And if you're not sort of careful with it, it can ultimately either cause you to plateau or worse, start to regress. And that's really where accounting, finance in general start to take shape. They can help drive data driven decision making, and fundamentally that will set you up to start making better decisions, which in turn can lead to better profitability and better cash flow.
Yeah. A lot of really good points there. And I think the data driven decision making component so critical. And like we've had businesses that we own that it was actually fairly easy to get it to a certain point in terms of like total revenue, but getting it to the next level and, either maintaining that profit margin or improving that profit margin, it really does become more difficult as you begin to scale. Because not only do you have more clients, and so as the owner, you're naturally just not going to be able to stay as in tune with every single client and what they want and what their feedback is. But chances are you have more people on your team, right? I mean, most businesses, in order to scale, that's going to involve bringing in more team members. And, the data-driven decision making, some of the predictability that can help an owner with is critical. Like one of the examples that comes to mind in one of the businesses that we've owned, we sold this particular business last year, but I can remember us. So we had a full-time manager that we kind of had in place when we launched the business, and he did all the sales as well for about the first 8 or 9 months. And we struggled with this decision of, hey, when is it the right time to bring in another salesperson to work under this manager? And then on top of that, what's the right comp plan? Is it, base salary plus commission? Is it commission only? I think had we had a really good strategic accountant or CPA partner that understood our business, they could have been instrumental in helping us essentially, based on the numbers and the data that we had, say, hey, now's the right time to hire this person, and this is the right type of comp plan, and here's the amount of revenue that they would need to do in addition to what you're already doing to more than pay for themselves. So that's just one example. I'm sure you could share countless other examples of where, having this data-driven approach makes sense. But, before we dive into some of this, because you kind of have 3 core, pillars, if you will, that your firm specializes in. So I want to spend some time with each of those, but let's rewind a little bit. How did you get involved in accounting? How did you get to the point of having your own firm and kind of specializing, I guess, the way that you do? Because from what I can tell, you're not structured the same way, or you're not approaching things the same way as a lot of other accounting firms out there.
Yeah, I'll take that as a compliment. First off,
it is. It's refreshing.
So I think part of what when you say like I take a different approach, I'll start with that point, because I actually went to college to be a psychology major. That was actually what I was most interested in. I was fascinated by why we as humans make the decisions we make, or in some cases don't make the decisions that we make. The whole decision-making process I'm fascinated by. And so I wanted to kind of drill into that. And I don't really remember exactly why, but somewhere along the way, I fell into the accounting crowd, and they sucked me in over to that side of the college. And I liked it, to be honest with you. I enjoyed it. I found it intriguing and interesting. And when I graduated, I worked in public accounting for one of the big 4 firms, as they're now referred to. But for a while, like I got to this place where I just felt like what I was doing wasn't actually contributing really in any meaningful way. And so I left and went into private, like a lot of people do. And I enjoyed that. I helped take a company public, and I found that very interesting and mentally stimulating. But again, I still sort of felt that lacking. Like there was something that I wasn't able to provide that I really wanted to. And so for like the last 12, 13 years, I've been working primarily with, I don't want to say small businesses, but I'll say more founder-owned type businesses, entrepreneurs, individual business owners. And what I found the joy with that is like really able to help them with things they wanted help with, right? So I've actually, I found that nice place that I think I was looking for in terms of being able to really service the client. And I think that comes back to the psychology component of it, which is helping people make the decisions that are best for them. And so I always kind of start to look at it from the standpoint of, what are you trying to accomplish? Not just business wise, but as an individual, as a person. A lot of times businesses are created to fund or do something on the personal side. And I think it's important for people to understand the connection between the two of those. But all that to say, to kind of bring this back to where we started, like I try to help clients with what they need depending upon where they're at in that process, right? So sometimes when we start out as business owners, really what you need is just some solid numbers in place, maybe for compliance purposes, to file taxes, things like that, right? But at a certain point, maybe you're scaling the business and you need to get it to a place. And at that point, then we start talking about the more strategic components of things, right? How do you get from being maybe only needing compliance to growth, scale, focused business? And then hopefully we can get you to a place where you as a business owner are less concerned about the next dollar you make and more concerned about how you spend the next hour of your time. And when we get there, then we start talking about much different kind of conversations. Like, how do you really start outsourcing the decision making around your finances such that someone who's not an expert in finances, your stuff is still being taken care of in the best way possible. So that's kind of like where my firm tends to focus and how we try to meet people where they're at.
Yeah, I love that phrase. I'd written this down from the first time you and I chatted. The goal is to get to where the next dollar is less important than the next hour. And, my show's Path to Freedom, right? And one thing I've really, I think, kind of discovered over the years doing this is that, everyone has at least somewhat of a different definition of what freedom is going to mean to them in their lives. But also a lot of similarities in terms of what they're looking for or chasing, right? Like the vast majority of us, we want to be working and producing in some capacity, right? Like the goal of just, being able to retire by 40 and play golf and sit on the beach and drink margaritas every day for the rest of your life. Like most of the type of people that are driven to be entrepreneurs, they're going to be bored with that after a week or two, right? So it's not a matter of like, hey, freedom is not having to work anymore, but it's not having to trade your time for money, having freedom of time, financial freedom, and really being able to spend your time how you want to spend it with the people that you want to spend it with. And that's, to me, very in line with this, the next dollar is less important than the next hour. And most entrepreneurs are not going to be able to start off in that place, right? Like you've got to get the revenue coming in. You're going to have expenses. Like you're going to, need to cover the expenses of the business, but you also have living expenses. So it is going to be a process to get there. But I think that's where most people are trying to get. And I can see, where, given a little bit of your background, going to school for psychology, and I can see where, the business you've built today is probably very rewarding, because it sounds like, you're taking a very consultative approach with each of your clients. And so, the strategy is going to be likely very different with one client compared to with the next client. So I can see where that's exciting, because it just, not every client's the exact same. Not every meeting's the exact same. So, I guess from here, let's jump into like, what are kind of the three, core pillars or services that you guys offer to your clients, and then maybe we can unpack each of those a little bit more.
Yeah. So, I think of it as kind of like it's steps, right? So the first step is you have to have good data to really do anything well, right? There's an old adage, and it's attributed to a bunch of people, but what gets measured can be managed, meaning that it's really hard to like own something and use it in any meaningful way if you don't have anything to leverage, right? You don't have any information to utilize in that place. So regardless of your size of the business or what the ambitions are for it, whether it's for, just like I said, compliance purposes or to scale, you have to have accurate data. Like you have to complete and accurate and meaningful data. And so that at the base point, that's where we always try to meet our clients. So some people already have that in place. That's great. You're one step up on that staircase, right? But for some people who are just starting out, that's where you need to that's where you got to start at. And it's important that you find a partner who in that relationship is going to meet you where you need to be met, right? So what I mean by that is, like, a question I often get from people is, okay, great, I know I need a bookkeeper or I need a CPA, but like, how do I hire this person? Like, I don't know anything about accounting. Like, what is the right way to find this person, right? It's hard to be an expert in something when you're not an expert at it.
Or interview experts if you don't know what you're looking for.
You don't know what you don't know, right? How do you find that person? So at a base level, like I say, well, make sure that you, personality wise, they're a fit for you. Like, if you want to have your communication be through email, make sure that the person you hire is okay with communicating through email. If you're someone who likes to text, does your CPA or your bookkeeper, are they open to having a text communication with you? Like, don't go out and like start dating someone who clearly doesn't have the same interests as you, because guess what? You're going to break up. It's just going to not end well. Like, that's just how relationships work. But I think oftentimes we make the mistake of not viewing this as a relationship. But
Yeah.
it is, right? Fundamentally, like
Yeah.
if you want to get something meaningful out of connecting with someone, then you have to treat it as something meaningful, and you have to contribute and meet that person part way. So I think if you're in that phase, you're trying to hire a bookkeeper, you know, look them up on like the state board of accountancy. Like, do they have claims against them? If they do, maybe not someone you want to work with. Do they understand who you are? Do they understand what you're trying to accomplish? What is the cadence at which with they want to work? There's not necessarily a wrong person out there. It's just, are they the wrong person for you? So you got to go find the right person for you and make sure that they fit with what you're trying to accomplish at that point.
When I can give I'll give a real quick example just to maybe add a little color to that, because we switched to a new CPA probably midway through 2023, so about a year ago, and we had at that time 4 LLCs that my wife and I either owned 100% of or had a majority ownership stake in, and a previous CPA had been managing all of that for us. And that original CPA, we got connected with him just because a mentor and someone that invested in our very first franchise business with us had worked with him in other businesses, and that was just always his guy, right? So his guy became our guy.
Yep.
This guy was a great CPA in terms of his knowledge and understanding, right? He wasn't lacking there, but he was also probably in his early 60s, very much winding down his career. And I think my wife and I, compared to a lot of his clients, we were much newer to business ownership. I think a lot of his clients had been with him for 15, 20, some odd years, more seasoned entrepreneurs, right? So, they had all this history with him. They also had all this experience and knowledge themselves. So like they knew the right types of questions to bring to him. They knew, when to go to him and say, hey, let's have a strategy call because I think we need to look at this. So he kind of expected that from us, right? We never had any of these types of conversations on the front end of the relationship like you're recommending. And so our relationship became very transactional. We gave him the data that he requested for in time to file the taxes, but there was this huge gap where we weren't strategizing. We weren't, he wasn't coming to us and say, hey, have you guys thought about, maybe restructuring as an S corp instead of an LLC, and you can save, some money here based on last year's, revenue that you did in these two businesses. So the new CPA that we switched to is very much what you're describing, met us where we were. We had numerous in-depth conversations with him before we decided to sign on. And he's very strategic. He will come to us with ideas or questions or suggestions based on what he's seen and where he thinks there's opportunity to optimize. So I just wanted to kind of share that example with the listeners, because I think, some folks, if they haven't had experience working with a CPA or an accounting firm yet, they probably hear and they're like, well, that makes sense. But maybe some real life examples helps that, sink in a little bit more. And I can tell you, for us, within the first couple months of us working with this new CPA, he's identified ways to save us at least $60,000 or $70,000 a year in taxes.
Yeah, that's great. And to emphasize a couple things you said there, because I think that's spot on with what you're talking about, right? It's not uncommon to sort of like have someone refer you to someone and be like, well, this is my guy. They can be your guy. Yeah. Well, they're their guy because it was a good fit for them. But you have to, like, we always like referrals because, oh, my this person, I trust them. They make a good referral. Probably is a great person, but are they the right person for you? Right. That's ultimately it. I don't think that you would say the CPA, the first one, was a bad CPA. It just wasn't what you needed from that fit. Right. And I think that's the thing that's important to understand in all of this, is that, and it may be someone you hire today only is the right person for you for a year or two. And there's nothing wrong with that either. It's about making sure that what you need is being supported by the people you're working with. And that's true at every step along the way.
Hey everyone, we'll get right back to the episode, but I wanted to quickly share a free resource with you. If you're curious about franchise ownership and want to learn more about how countless people, including myself, have leveraged franchising as a way to create more freedom for themselves and to take control of their livelihood, I've put together an ebook. It's called Franchise Wealth Creation, and it's the perfect starting point for anyone that's just curious to learn more about this whole franchise thing and how I've helped hundreds of other people navigate all the steps involved in understanding and researching franchising. So click the link in the show notes, fill out a short form. I'll send you the ebook. I think it's a great starting point if you're curious at all about learning more about franchising. All right, let's get back to the episode. Yeah, 100%. It's true with employees. You hear it all the time, right? The employee that helps you get to a certain point is not necessarily going to be the right person to help you take it to the next level from there. So, naturally that should extend to other partnerships or team members that you have, even if you're outsourcing it, like your CPA or your accounting firm.
Yeah. Which I think is maybe a good transition point, if I may, because
Yeah.
what we talk about from getting from that sort of compliance focused, if you will, need to maybe the more strategic growth aspect of a business. So as you're starting to scale, I want to sort of, as the backdrop for what I'm about to talk about, refer to something called the rule of 3 and 10. It's more of a principle, but that just happens to be what it's called. And so for those of you unfamiliar with this, basically what it means or implies is that as your business scales, and it can be either from a revenue perspective or an employee perspective, you call that, Wes, from like 1 to 3 or 3 to 10 or 10 to 30 or 30 to 100, keep flying the multiples, that what you have and got you to that point is going to break if you try to use that to get to the next level. Okay. Yeah. And so this is sort of that plateau that we referred to in the beginning of this conversation, right? Which is when you start out, maybe you can get to 100,000. That's great. But to get to 300,000, you may need to hire someone else to do that. Well, the challenge with that, right, is that inherently you can't do things the same way because the way you did them before didn't require any sort of communication, right? It was just you. You don't have to tell you what to do. You don't have to tell you to review the work. It just happens, right? But when you bring someone else on, now you have to figure out like, well, how am I going to communicate with this person? What are the processes that need to change?
How am I going to train them?
How am I going to train them? All
these things, need to know.
Yeah. And so all these things sort of compound. And so it's the place I see this the most common actually is when you're trying to get from like 3 to 400,000 to like 1 million. And then again, from 1 million to like 3 million. Those are the biggest leaps for people because what has to happen from a process, from a revenue, from an employee perspective, those are some of the biggest leaps you have out there. And they're the most dramatic because even going from like 3 million to 10 million, that's big, but incrementally it isn't as big as going from like 1 to 3 or 300 to 1 million, right? So when we talk about this, those are the places where we often see companies start to plateau. They plateau around 500,000, they plateau around like 1.2, 1.5 million. And they start to go like, why am I struggling? Like I was successful. Like they start to question themselves, why is this not working anymore? Well, it's not working anymore because you're acting like $1 million business, but you're trying to be a $3 million business. One of those things is going to win out. And it's usually not going to be the $3 million business if you're acting like a $1 million business.
Yeah. And I imagine you've seen scenarios because like this has happened a bit with us in one of our businesses where it's, to get to that $1 million mark, it took 3.5 years, but we've been able to maintain that. And then it's kind of gone up to 1.2, I think 2021, we did like 1.6, but this is a home improvement business. So like 2021 was a bit of an anomaly of a year, just with like every home service business broke records that year. So you can almost throw that number out a little bit. And, we're seeing modest growth, but nowhere near the year over year growth that we were seeing, on our way to 1 million. And then on top of that, we have made some additional investments in infrastructure, right? A bigger warehouse, another cargo van, another trailer, a forklift to receive deliveries. And so, I think we've kind of like put one foot in the like, hey, let's take this to a $3 million plus business, but maybe not both feet. And so it has been a little frustrating because we're seeing a bit of that plateau in the revenue growth, but then the profitability has even gone backwards a little bit because we have made some of these other investments in infrastructure that hasn't, yielded enough additional revenue to not negatively impact the bottom line.
Yeah.
I'd like to think we're not alone in some of those frustrations, but it can be discouraging, and I guess my guess is a lot of people, ourselves included in this example, take their foot off of the gas a little too soon, or they're not applying pressure in the right areas to really see that growth that they're looking for.
Yeah, I mean, to bring it back to like health again, just because I think a lot of people can relate to this, right? Like if you start lifting weights and you start lifting 10-pound weights and you're doing some bicep curls or something like that, and you do that for a while, you build up, you're like, okay, this is no longer stressful or hard on my muscles, but you keep lifting that. And then you're like, why can't I lift 30-pound weights? I'm doing great on these 10s, but like, why can I not do 30? It's like, well, you're still lifting 10-pound weights. Like why do you think that this magically is going to become 30-pound weights unless you actually start incrementally working towards that and treat it as though you're trying to get to 30-pound weights, right? And that tends to be what happens with businesses. I think letting the foot off the pedal is a very common scenario as well. We feel the benefit of the success, right? We've set this milestone. Oh, I'm a 7-figure revenue business now. Boom, I've made it. Inherently, you're going to start to ease off of that a little bit. And what got you there, again, no longer works anymore. It isn't just about being motivated to be a $1 million business. You have to change your mindset about how you're going to grow this. You have to think differently about how you're going to get to the next level. All of those things sort of like, unfortunately, undermine a business's trajectory in a lot of cases.
Yeah, on that. So how often, because I think you gave me an example of this when we were chatting before. I've seen examples of this. Like, my wife and I have this conversation fairly often where we kind of wrestle a little bit between, growth goals and lifestyle goals, right? Because to your point, the business that I'm referring to, where we've been a 7-figure business for the past three years at least, and it's grown from 1 million, but not crazy, but it's also become a very lifestyle friendly business for us, right? So we go back and forth and like, hey, do we think that with the right strategy and the right effort, we can get this to a 2 and then a $3 million a year business? Absolutely. But is that really what we want to do? Or, it's generating great income for us right now. It's still, and because it's so lifestyle friendly, because this is really my wife's business that's already always been her main focus. She's got a great team around her, right? So that's why it's become so lifestyle friendly. It's not all revolving around her, and it is profitable. So, this is a business that we could sell at some point down the road, assuming nothing drastic changes or we have any major setbacks. So we kind of go back and forth. And I think you gave me an example before with one of your clients where, he thought this, his goal was one thing, and you really sat down and broke down like some of what his life goals were. And you're like, you know what, this is not actually what you need. This is what you need in order to accomplish that. So like, how often do you run into that? And maybe share an example or two, if you don't mind, of where you've seen that the goals just need to be realigned to make sure you have the right strategy to get to the right goal.
So to answer the first question, I would say 99.999% of the time, that is what happens. And I say that because it's true, but I think part of it feeds into the fact that a lot of people just don't allow themselves, and I think partly societally driven, but don't allow themselves to really think about what is going to make them happy. What do I really want, right? I'm only on this planet for so many years. What is the singular most important thing for me to be doing at any given point in time? And because of the way like society is constructed and things sort of get talked about and shared about, what we tend to focus on is that revenue goal. Like, I'm going to be like a 7-figure business or a 9-figure revenue business or whatever that is. Right. So I'll give you the example that we talked about, and I'll sort of fill everyone in on is I had a client. It was a service-based business. He was doing about $500,000 to $600,000 a year. was pretty successful, pretty high margins, right? So he was fairly profitable on that money. And he came to me and he was like, "Listen, I want to make $1 million a year." I was like, "Okay, great." And we kind of sat with it with a bit of a pregnant pause. And I said, "Why? Like, what is it about that you want to get there?" Because what I told him, I was like, "That's a very arbitrary number. I know it doesn't seem like it because like a million's a nice round number and everyone uses it, but like it's just as random as if I said like I want to make 1.21045 million dollars. Like it's just another number, right?"
It is,
And
yeah.
he was like, "Well," he's like, it's important to me. I just feel like that would, and we just kept going down that. I kept asking why until he stopped hemming and hawing, and like you could tell that the answer was sincere. And I knew we got there because the answer was no longer about money. He looked at me and he said, I just want to go and be able to see my son play baseball. And he plays baseball a couple times a week. And I feel like if I get to that number, I'll be able to do that.
Yeah.
Now, when we got to that point, that's where the breakthrough happened. Because what we realized is that the problem we're trying to solve is not about making $1 million. It's about being able to do that. And whether we believe it or not, the path to the $1 million is a very different path than the path to being able to see your son play baseball a couple nights a week. And
right.
so
The path to $1 million may result in him seeing less of his son play baseball, at least for a period of time, right? Maybe not indefinitely, but for a period of time, that push that it would require, him probably bringing on some more employees and having to train them and get them up to speed. Like that's time
100%.
consuming.
So we ran the numbers down, and what we showed him was by making a few tweaks here and there, really what he needed to be able to do was get to about 650, maybe 700,000 in revenue. He could then start outsourcing a few of the other tasks. He could be making more than he was currently, and probably what he would have been making had he tried to get to $1 million because of all the costs that he would have needed to sustain that level of productivity. And so what he realized is like, I can work harder and make the same, or I can do less and make the same. Now, when presented with that option, I think most people will go, well, I would like to work less and make the same if those are my two choices. And that's what he came back to, right? And so this is where it's all about, you have to really be honest with yourself and understand, what am I trying to solve for? What is the thing that is the most important aspect to me? And believe it or not, we don't often know the answer to that. Like some people are really keyed in on it and it's great for them, but I would say the vast majority of business owners aren't. And what they end up doing is they end up creating a job for themselves instead of a business. And when you create a job for yourself, all you've done is make yourself have less freedom, less flexibility, less ability to do the things that when you start asking yourself that question over and over again, you're getting further away from rather than closer.
Yeah, dude, I talk about this so often on the show and with the clients that I coach because, as you know, I specialize in franchise ownership, right? So, like, I work with people that are exploring, franchise ownership as a way of either getting into business for themselves for the first time, or, a lot of times I work with someone that already owns a business and they've built it over 10, 15, 20 years, know all the work it takes to build something from scratch. They're like, I'd like to have another income stream, but I don't have another 10 years to build something from the ground up. Anyways, it always starts for me with, really helping them articulate what the goal is. And just like in your example with your client, I call it the 7-layer deep exercise, right? Where, hey, because it's almost always time and money and freedom, or like the surface level answers that someone's going to give you, like, hey, why would you want to own your own business? More control, more time, more freedom. Okay, well, why? What would more time allow you to do? Great. Well, why is that important to you? Great. And you just keep kind of pulling it out of them until you have something that's genuine, meaningful, and probably pretty specific to them. And that's so important because what that then allows us to do is go out and find the right type of business model for them, right? Like, just a common scenario that I hear a lot of times is, I'll have an introductory meeting with someone. They say, Wes, we've recently started thinking about this franchise thing. We were on Florida with our family on vacation, and we went to this restaurant and we absolutely loved it. And our area doesn't have anything like it. And it would do so well in our area. And then we found out they're franchising it. So now we're considering opening a franchise, a restaurant franchise. And then you get a little further into the conversation, you start getting into some of the why or the goals, and you realize, well, we have 3 young kids, and they love to play sports, and family time's important. And so then it's like you got to kind of help them understand, well, hey, a restaurant whose peak hours are from like 5 to 9 p.m. or may not be the best lifestyle business for you if one of your biggest goals is more time to be at your kids' sports activity. So because it happens all the time where someone ends up with less freedom and less control once they become a business owner, because they either, or it could be a combination, they either get into the wrong business, wrong type of business, or they don't structure it the right way. They create themselves a job, like you said. So like this stuff is so important. And if you're in that situation today where you feel like you have kind of created a job for yourself as a business owner, it doesn't necessarily mean you have to start all over, right? Like it's just bringing in someone, usually I think from the outside, is really beneficial, because as the owner, you're so close to it and you're in it all the time. It's really valuable to have that, third party perspective. But yeah, I hate seeing it. It happens often. And, these are the types of, conversation that I wish anyone considering getting into a business would listen to before, because I think it can save them a lot of time and probably a lot of frustration. Hey everyone, we'll be right back to the episode, but one quick note, success doesn't happen in a vacuum. So if you'd like to learn more, you want to go deeper and interact with like-minded people, I'd love to have you join the free Path to Freedom Facebook group. You can join by going to pathtofreedom.com/group and become a part of the Path to Freedom community. All right, back to the episode.
Yeah. And, that's when you're at that point where you're trying to figure out, like, where am I going with this business, right? You're in that strategic growth place, if you will. A lot, we're trying to get you to a point where what we talked about up front, where that next dollar is less important than the next hour, right? But to get there, you've got to be really strategic about how you make that next leap. Otherwise, you do end up with a job. And so when we talk to clients, when they come to us like, hey, I'm looking to accomplish this, we always we have to pick at that scab to a certain extent, right? We have to keep going and going until they're really revealing an honest answer. And it doesn't seem like an accounting conversation, but it is an accounting conversation, because what we want to be able to come back to, whether it's in the strategic growth phase or when we get to that stewardship phase, we want to know, and by we, I mean me as your advisor and you as the client, what is the thing that whenever we're making a decision on, we come back to and go, this is what I'm measuring this decision against, right? Yeah. So if I'm going to do a loan, why am I doing the loan? Is it getting me closer to what I want to be doing, or is it not getting me closer? What are the things that are underlying this loan that are at odds with what I'm trying to accomplish at a major level? And when you can start to sort of have that strategic viewpoint on each decision, then it becomes a lot easier to narrow in on what is the decision I'm going to make, right? Because you not only have the data to be able to make the right decision, but you have the guidance or the North Star to be able to make sure that you're using the data to get you to that point. And it's that combination of things that when you have both of those, that's really where your life is going to become much more at peace. And you'll find that you're fighting it less, you'll feel more authentic, and you'll start to, I think, really find the freedom that most people are really truly seeking at the end of the day, because your personal life and your business life will be working in harmony together, because one is guiding the other and the other vice versa.
Yeah. Well said. Well said. That North Star to come back to is so important, because, when you're a business owner and you're running so fast, like a lot of times, again, because you're just so close to it, you may look at one option, like maybe it's taking out a loan, and hey, this loan would allow me to do this and do this and that. But it can be really good to step back, evaluate, especially with trusted advisors, and say, hey, let's just recalibrate here, and let's make sure that if we do this, does that align and get us closer to this ultimate kind of goal that we're working towards? Or, in fact, maybe it actually takes us a little further away, even though, in the moment or in the short term, it feels like it may be a good thing to do.
Can I give you a quick example? Just because I'm actually battling this right now for a client. So this is one of our sort of stewardship based clients, but has sort of elevated, from sort of the strategic growth piece. So his main goal was he's got a building that he owns for his business. He wants to do some other things. He's got a fair amount of equipment debt. So his big thing is he's trying to get that all paid off as quickly as possible. Went to a bank. I was not involved in this. I'm not trying to claim responsibility. Just went to a bank and was like, "Hey, can you refinance these for me and get me a lower interest rate?" They're like, "Sure." So they put forth a loan to him. He was going to save probably $5,000, $6,000, $7,000 a month in interest. Now, if I stopped there, you'd be like, "That's awesome. That's great. He's going to save himself a bunch of money." So he's about to sign it, and it was going to be on Monday, and this was like the Wednesday before. And I said, "Can you send me the terms of this loan? I have not seen it yet. I'd like to take a look at it. This is what you've hired me to do. I want to make sure that we're in a good place." He goes, "Sure." He goes, "But I don't think I've gotten that." And I said, "Well, one, legally they're required to give you that. So,
get it.
Either they're not following through on that, or two, if you haven't seen it and they've sent it to you, then we should make sure we look at it together." So I request it from the bank. We take a look at it. And what we quickly realized is that, the bank was not doing anything nefarious. I don't mean to suggest the bank was the villain in this. But what we looked at was, he was signing up for a lot of things that were not going to be in alignment with what he really wanted. So he had to move all of his merchant processing over to the bank. He had to move all of his personal and business banking over to the bank. He had he had a 5-year prepayment penalty, meaning that even though his primary goal was to get all this stuff paid off, he was going to be penalized by doing that. Right. And so this is not the bank's fault, but the bank did not know what his single North Star was that he was working towards. They just knew he was trying to pay less in interest. So here we have this case in point, right, where if he had gone through and signed this, he would have saved money, but he would not have necessarily gotten closer to what he was really trying to accomplish. And so we've had to put this on pause, and we're having a conversation with the bank. We're working through this and trying to make sure that we have some options for him. And the bank doesn't understand. They're like, "Well, we thought you were okay with this." And it's like, "Well, but you don't understand what my client's actual priorities are." And I'm not blaming you for that, but he's hired us to make sure that every decision he makes gets him to a point that is closer to what he wants. And this right now, as you structure it, is not closer to what he wants. So we either need to figure something out, or we have to go find a different loan. And so, again, just to emphasize it, when both things work in harmony, you start making better choices here. And having that idea of like, what is the most important thing, it ultimately is going to save him a lot of money and heartache in this scenario, even though in the short term, as you said, he would have saved some money.
Yeah. That's such a good example. Now, out of curiosity, because I was going to ask you, if you could share with the audience a little bit about like what's your typical, kind of structure working relationship with your clients look like, because from my personal experience, having worked with a few different CPAs in our own businesses, like I've seen two different ends of the spectrum. And so, kind of going back to what we touched on earlier, like I think it's important to, get a sense of how your CPA works, or are they going to be the type that is going to, really meet you where you are? So like with this example you just gave, like, will you be involved in those meetings with the bank, or with your client, or will you kind of coach them up before the meeting and then say, "Hey, come back to me with the notes from the meeting and we'll discuss"? Or like, are you actually willing and able to jump into a meeting like that with a client?
Yeah. So before I answer that directly, what I'll preface is, like, as we've talked about each of the places we meet at clients, either compliance, those are strategic growth, or stewardship components.
Yeah.
Each of those is designed around kind of our one simple question, if you will, right? Which is, how much of a proactive communication do you want from us?
Yeah.
That's really what you're signing up for, right? At each of those stages, it's really about how involved do you want us in your process? There's no wrong answer. It's just what's best for you and in your situation, right? So in this particular client's perspective, and it's not just me, we have a wing of the firm that focuses on this, and we have limited power of attorneys with all of his financial people, banks, insurance companies, CPAs, you name it. And so we act on his behalf. And basically his job is, anytime he gets a pitch or a project or someone who wants to come talk to him about something, he's supposed to throw that to us, and we help evaluate it for him. So the sort of the value proposition, if you will, in this scenario is, he's not spending more than 20 to 25 hours a year on all of his finances. And yet all of his finances will be in a much better place than they were before working with us, because he doesn't have to, he just comes in the beginning when he says, "This is what I want to do." And he comes at the end when he has to sign it and make sure it gets implemented. All the messy in between stuff where business owners get lost on, that's where our firm takes over. And so we have a call scheduled in a week with a bank. And what we told them basically was, look, we'll talk to you, but we're not making a decision until our client's back in the country. He's going to Peru for a while. So we can talk, but this is not happening until he gets back, because ultimately it's his choice. So we can talk about it in the meantime, but nothing's happening until then.
So that's an example of a client that wants you to really take the lead and be very proactive. And then I assume you have other clients that, are not of the same mindset. They're going to come to you when they have questions, or it's just not going to be quite the same type of relationship.
If what you've signed up for is compliance bookkeeping, then there isn't much for us to be coming.
You're not helping negotiate loan terms with a bank.
And I mean, that's because that's what you signed up for, right? Like if you go to McDonald's and you're like, I want the cheeseburger, you're not getting a Big Mac. That's just, you ordered the cheeseburger
or the filet mignon.
Yeah, like that's what you asked for. And that's, again, there's nothing wrong with that. And for a lot of people, like what I just described, as ideal as that might sound to them, it is not ideal for them, right? Like they're not at a place where that's where they should be spending their money for that kind of support and necessity. Whereas for him, it is. I mean, he went from doing $300,000 a month to $750,000 a month in about 3 months.
Nice.
Like he's got what we call full net problems, meaning that if he didn't address them, he was going to have a whole bunch of fish pulled into his boat and not any ideas of what to do with it. Yeah, so now he's going to go back to the shore with all these fish, which is amazing. But now what does he do with it? And it's the same thing. I explained to him, I was like, listen, you have an amazing situation right here. You've been blessed to have all this money come to you. You've worked really hard to earn it, but you're going to get to the end of the year and you're going to owe a lot of money, and you're not going to be happy about it unless we start working on it right now.
We'll get right back to the episode in just a minute, but if you've been considering business ownership, if you're already a business owner looking to expand and you're curious about franchising, I'd love to connect with you, answer any initial questions that you have, talk about a specific franchise, and detail the exact process that I use and have taken hundreds of people through to help them understand franchise ownership, find the right franchise for them, and conduct the necessary due diligence. Click the link in the show notes if you'd like to schedule a free, no obligation strategy call. I look forward to talking with you. And now back to the episode. Yeah, that's something else that I would point out to the listeners is that, being proactive, because I know, when you're starting a business, it's very easy to kind of just fall into the mindset of like, look, I just need bookkeeping, and then I'll give those, financial statements to an accountant at the end of the year, and I will file my taxes. But that can pretty quickly, like within the matter of a year or two, in a lot of cases, get you to a point where if you don't adjust and start being more proactive with these types of things, there can be some really big and sometimes scary surprises in the form of, hey, you now owe the IRS a lot of money at the end of the year for taxes. And if you don't have an idea of what that number may be, because you're not looking out and forecasting, and if you don't have some strategy in place where you're kind of, stashing money away throughout the year, like that happened to my wife and I a couple years into business ownership. The first year it wasn't that big of a deal because one of us still had a W-2. So the money we made from our business really just kind of offset W-2 income. By the end of our second year, though, we had a big tax bill that we had to owe, and it was a surprise. It wasn't a surprise that we owed taxes, right? But it was a surprise to us
how much you owed,
much we owed. Yeah. And we hadn't been planning. I mean, thankfully we had the money to do it, but that, like, I can vividly remember this, right? Like I had this real estate deal that I wanted to invest in, and the majority of the money for that ended up going to pay taxes. And we didn't.
And is that not like the worst feeling ever?
It was right? The worst feeling.
Because you've like in your head, and this is where the psychology component comes in, which is you see this money being made every year, right? Every month you're like, look at how much better I'm doing, right? And you get to the end of the year, you're like, so I made X amount. And then all of a sudden you have someone come in and say, yeah, all that amount you just made, it's all going to go to the government.
Yeah, it was.
And it's like a complete kick you in the gut type moment.
Yep. it was that. And then I feel like part of me just felt stupid because I'm like, we should have been smarter than this and more pro. Because like I said, it wasn't like I didn't understand we were going to have to pay taxes, right? But like if you're used to a W-2 income where it's all being held out before the money hits your bank account, like that's a totally different dynamic and requires a totally different mindset than, essentially 100% of the money is coming into your business account. And then you've got to, pay your expenses obviously for your business, but then account for the tax component of that.
So I will say one thing that we try to do for our clients, regardless of what stage you're at. So even if we're just sort of helping you maintain accurate, meaningful financials, compliance type bookkeeping, I do always try to make sure that the client understands how taxes are going to work for them. Meaning that like, if you're just a sole proprietorship, do you understand that you're going to pay basically 15.3% before you even get to profit, or like what your actual income tax is, right? And many of them don't understand that. Right? Because they're used to being a W-2 employee, and they're like, well, they don't see the employer and the employee portion come out. You just kind of see what you get at the end of the day. And you don't realize that you have to pay that now because you're both the employee and the employer in this situation, and you're responsible for that. And so we try to help set them up for that, and like give them a back of the napkin type thing. Okay, look, each month, if you make this amount, you got to kind of set aside this amount for taxes. We try to help them put up a reserve account in place, put money into it. Simple things like that are just kind of meant to make sure they don't undermine themselves, right? The last thing you want to see is someone work really hard and, like you described, get to the end of the year and be what we call financial statement rich, but cash account poor. Meaning like you show all this money on your financials to the government, but you have no money in the bank to pay for it. That's like the worst of the worst scenarios.
Yeah, you're upside down at that point. This is just curious, and I'm sure it varies depending on the client and the situation. Is there a particular way that you would recommend? I mean, just say it's a relatively new business owner, right? So they're in their first or second year of business. So, things are really just ramping up. It's not too complex yet. You give them kind of some guidelines. Hey, if you make X amount this month, go ahead and set aside X percentage of that for taxes. Are you recommending that they start going ahead and actually making payments to the government throughout the year? Are you recommending they put that in like a high yield savings account or some type of other investment account, and then, use that and pay the tax bill in a lump sum at the end of the year? Does it just vary? That's something I'm personally, curious what you would advise on.
So the answer, as always, is it depends, right? So here's what I'll unpack that a little bit below, but let me give you some examples. So it is hard when all you see from like our firm's perspective is the business component to it, right? Because what we don't know is how does that feed into your individual situation, right? You could have a whole bunch of other things. You could do some loss harvesting. You could have some properties that are, going to help reduce some of the profitability elsewhere. So I just because I can see what you're making from a business perspective does not really give me a lot of insight into what you're going to owe from an overall tax perspective. If you're just trying to isolate down like, hey, all I have is this business, if you use like roughly a 30% income tax rate on what your profits are, that kind of gives you a rough idea of what you should be setting aside. Then other taxes come into play as to what type of entity it is, right? We talked about a sole proprietorship and self-employment tax versus, say, you make an election to become an S corp, or maybe it's a C corp and it has its own tax liability. So that's sort of like a depends type of situation there. As far as the making payments go, I mean, look, the IRS will tell you you're required to make quarterly payments based upon what you owe at that point, so that you don't end up owing interest and penalties come the end of the year, right? I would also say that I also payments. And I have clients who look at it and go, I have investments that I can put that money into and make 10% on, and the government's going to charge me 8% right now to not pay that timely. I'm going to make 2% by doing that. That's totally their decision. That is a personal sort of risk-based decision for you. But the important part of this, and this is sort of the undermining of everything we talk about with clients in our firm, is you need to have the information and the data to be able to make that smart decision for yourself. If you don't have that information, then you're making a gut-based decision rather than a data-driven decision. And if you get it right, then you kind of got lucky. You need to have the numbers and you need to have the information there to know that you are consciously choosing this as opposed to it being chosen for you.
Yeah. 100%. I mean, it's I don't know, from our own personal experience, be proactive. If you feel like you're behind, don't let that feed into you delaying even longer to, make a decision and take some sort of action. Just, take the action, get some plan in place to get you caught up, and then going forward, be more proactive and try to get yourself to a better place with all of it. But I think bottom line is, I know we're kind of coming up at the top of the hour here, so I don't want to keep you if you have other meetings or whatnot. But with a good strategic relationship, with a good accounting firm or CPA that, is thinking about things the way Nolan and his firm are, they can help put a significant amount of additional money in your pocket as the owner. They can really be a strategic advisor in helping you make sure that you're actually getting everything that you want out of business ownership, and that it's truly the vehicle to helping you, create more freedom for yourself instead of doing the opposite of that, and being a job that's even more restrictive or more controlling than whatever it was that you were doing before you got into business ownership. So don't do QuickBooks yourself, folks. Even if you've taken a little course or watched a YouTube video, it's never going to be a good use of your time as the business owner. And bring in the professionals, the guys like Nolan that are smarter than most of us when it comes to accounting and actually enjoy, looking at these types of things.
Can I add just a couple thoughts for people to take away, if that's okay?
Please. I just didn't want to keep you if you were pressed for time.
There's a lot of, we could spend hours and hours talking about all the nuances of all this, but I would say if you're out there as a business owner and you're sitting there going, okay, this is great. What does this really mean for me? Like, where do I start? What I would say is, one, understand that if you don't like what's happening right now, you're going to have to change and do something different. The world is not going to magically suddenly give you something and it's all going to start working better for you, right? So if what you're doing right now is not getting you the results you want, then you need to change what you're doing to get better results. So that's kind of the first thing that I think is important to understand. Second thing I would point out is that a lot of the reasons why we end up in the position we're at is because we avoid something. We know we need to do it, but we don't actively take control of it. This is no different from that. If you're but the hardest part of that is knowing where to start. So if you're unsure of where to start, don't worry about it being perfect. Just do something, because it's either going to be the wrong choice, in which case you know that wasn't the best thing and you can try something else, or it is going to be the right choice and you're one step closer to getting better off. But doing nothing is not going to get you what you want. Going back to what I just said, which is like, you have to change what you're doing, right?
It's going to make it worse. Now, it's just going to make it harder to get out of whatever hole you're in.
So if you're doing nothing now and it's not getting you the results, then you got to do something. But perfection is the enemy of progress. Okay. So like, you do not have to be perfect right now. Just start doing something. Go find someone, talk to people, interview accountants, whatever it is that you need to do, start doing something. And you'll find that once you start getting on that path, it will be easier, and you'll find less resistance and starting to make the changes that you really need to make. Those are probably the most important things I would say, is that I see that routinely undermining people, is they don't know where to start. So they don't do anything. And then they find themselves doing the same thing over and over again and wondering why nothing's getting better.
I believe it. We probably at least waited at least a year too long, to make a move to a new CPA and accounting firm ourselves. So that just take action, and it doesn't have to be perfect. I mean, that applies to so many things in life and business, but absolutely, to this topic as well. And I assume you guys have some sort of a process where, someone could reach out and you would do a free consultation with them, get to know a little bit more about their business, answer some of their questions, and you guys kind of work together to see if mutually it's a good fit.
Yeah, you can go out to our website, bradfieldco.com. There's a contact form on there. Submit the information, what you want to know about. We'll schedule a time. Whether we're the right fit for you or not, we'll talk to you and let you know why we are or not the right fit. We're pretty honest with people about that. I'm not looking to date and then break up in a couple months with you. So like, if I'm be honest with you, if I think I can help you, or if I think there's someone else who's better suited to help you with where you're at. But please reach out to us if you like what you heard and you kind of want to have a better conversation maybe about your finances. Like I said, starting is oftentimes the hardest part, and this can be a good way to start.
Yeah, 100%. We'll make sure your website is in the show notes to make it easy for people to find. Is there anywhere else you'd like to point people or mention before we wrap this one up?
You can find me on LinkedIn. Sometimes that's less sort of intimidating for people to reach out to and sort of connect there. So if that's easier for you, you can find me on LinkedIn, Nolan Bradbury. Shoot me a message on there and we connect if that's more comfortable for you.
Awesome. Well, I love what you guys are doing and how you're doing it, and I definitely did mean that as a compliment earlier when I said you're attacking this different than a lot of the accounting firms that I've run into. So it is refreshing, and I mean, I think this type of education and knowledge is absolutely critical for aspiring entrepreneurs out there, and even probably the vast majority of existing small business owners. And that message of just take action, I think is so key. So Nolan, thank you so much, man. I really appreciate it. I learned a ton talking with you. I have no doubt that the audience is also going to learn a ton and get a lot of value out of this. So thank you so much, Nolan Bradbury.
Thank you for having me, Wes. Pleasure to be here.